A proper bull flag breakout on NVDA today led us to a 20% profit. So let me walk you through the trade. First of all, we're going to start with the day trade watch list. Straight off the watch list, NVDA right here, long idea above $420. Now, initially, we were looking for lower lows for a range breakdown continuation trade idea on this stock. However, we know that we need to go into the day without a bias, right? So it was a short idea below 410, long idea above 420. Here's the price action. NVIDIA opens up and holds above $410. In fact, it doesn't even get near 410. It rejects off the PDC, drops down to 412, and then rallies up above the PDC. This causes the stock to go from red to green because it's opening under the PDC, then going above it, and rallies all the way up to $420. Now, at this time, 9:43 a.m., I'm typing in the alert room. I'll move to the alert room so you can see it. I'm typing in the alert room that we don't necessarily want to be chasing the move up on NVIDIA. That was at 9:52. Let's see right here, 9:43. Don't chase NVIDIA long. It's at the top trigger level. It's testing it at this time. We will want to wait for a pullback entry before taking a position. So we wait, again, 9:43 right here at this minute, right? We don't want to be chasing this up. Now, in this scenario, it would have paid to go ahead and take this trade long, but the risk to reward here, in my opinion, is not worth it, because it could have easily rejected back down to the previous day's close, or it could have went up. It would have been a 50-50 shot at this time. So instead, what we do is we wait for confirmation. Wait for confirmation. We get the breakout into the high of day. This serves as your confirmation, and then the pullback. And then this is where, in the alert room, I start telling you, keep your eyes out for a potential long idea if this dips back to the trigger level. That's posted at 9:52. Which is going to be over here during this pullback. It doesn't do that. It rallies back up to the high of day and then pulls back again. So I keep, alerting and letting you know, hey, NVIDIA, this is your dip area. Try to get entry long close to 420. NVIDIA back to high of day from this mention. And then I went ahead and let you know at 10 o'clock, loaded NVIDIA long. I want to try to take this entry soon. I took long entry at 10:03. That's right here. So why did I take the entry? What did I see? What led me to take the position? It's a bull flag formation. I mean, this is about as textbook as it gets. In the main chat, I know that there were a few naysayers that felt like the strength on NVIDIA could not continue, or that it was weakening over time, and that the stock was not going to break out of this. And they wound up closing the position prematurely. Now, I understand their lack of trust in the setup and the trade, but you are going to miss 100% of the opportunities that you do not take. Sometimes you have to trust your analysis. So what did I do? I decided to stay patient and go long on a dip entry as close to what I thought 420 as possible. So I got the entry at 421, so $1 off. So if I knew that if this ran to high of day from 421, my entry point at this arrow, if this ran to high of day, I was looking at a move up to 424. So a 421, 422, 23, 24, a $3 profit margin top side, and a $1 stop loss to the bottom side. That's a 3-to-1 reward to risk ratio. And that's just based off of the stock price, not based off of the options percentage. So going long here on a dip, I'm affording myself a tight risk with the potential for a high reward. And it's just holding through. From here, we get the consolidation. It's holding above $420 the entire time, and we get the break up into the high of day. Now, not only is this a bull flag formation, but look at where it holds. So 420 aside, this resistance over here, all of this consolidation, then becomes what over here? New support, right? Old resistance can become new support. So again, just letting you know, the entry that we took, very, very low risk, because it would have just been a tight stop out. I don't want to say low risk, let me say tight risk, because it would have been a quick stop out if this did not work. So very fast, if it didn't work, cut it, right? Otherwise, high reward. So we hold through, get the break of the downtrend trend line and the run up into the high of day. Wound up taking profits, I think, probably halfway through this top candle right here for a 20% gain. Very nice trade. So a couple ways to play or trade a bull flag breakout. One way is demonstrated here, where you don't go long on the break of the bull flag or the break of the top of the bull flag, but instead you're looking to go long on a dip to connect this dynamic line of support. Okay, so you're basically trying to time the dip entry on one of these lower lows as close to the breakdown point as possible. I'm not sure if that's making sense, but rather than going long here or going long up here, you are trying to get an entry either here, here, or here as it's testing the bottom trend line, right? The other way to take an entry long on a bull flag breakout would be at the break of the downtrend trend line. So here, the moment that the stock, because it's creating what? A high, lower high, lower high, lower high. The moment that the stock creates here, a higher high, you can go long at that point. So one way is not necessarily better than the other. It's just dependent on who you are as a trader, right? Because if you're going long at the bottom trend line, you're taking on a bit more risk because you don't have bounce confirmation, right? So here we don't have confirmation that this is going to break out. So there is risk that it will still break down or that it may not work. But we're able to capitalize on more profits. So we're giving up confirmation for more profits, the way that we entered and took the trade. Now, if you take the trade here, you're giving up profits for more confirmation. So it's flipped. At this point, you have confirmation. You see the volume increasing. You have confirmation that NVIDIA is creating higher highs. But by the time it gets to the high of day, the stock is already, the buyers are already wore out. You don't get as much profit offered on this trade as you would if you were entering down at the bottom trend line. So again, one way is not better than the other. It just kind of depends on who you are as a trader and if you need confirmation or if you're that trader that doesn't mind assuming a bit more risk to be able to profit a bit more. Now, this isn't the only trade that we took today. I want to review the Apple trade as well. But before I get to that trade, if you're with me so far, thank you for following along. Press that like button for me if you haven't done so already. And subscribe to the channel if you haven't done so already. It's the best way to support this type of work that I do. Apple, next trade that we took. Well, actually, this was the first trade that we took. And I want to show you why I took the trade, where I did, when I did. So we're going to look at this on two different time frames, but let's look at the day trade watch list and figure out why the Apple trade was here first of all. Anyways, Apple was a short idea below 174. That's down here. We're taking the entry short up here. Why are we doing that, right? So 5-minute time frame, this is what I'm seeing at the open. 1, 2, 3, so 15 minutes of rejection of the previous day's close, while SPY at this time is pushing into high of day. So I'm thinking, in my mind, Apple's showing relative weakness. It cannot reclaim the PDC at this time, which is that green line. It's going to reject and sell off back down to 174. So I take the entry early to be able to capitalize on a drop if we get a drop, right? And this is the other side to entering without confirmation. So I just showed you a trade on NVIDIA that worked as we entered without confirmation, right? And we were able to profit more. Now, this is the con side to entering without confirmation. We didn't, at this time, we did not have breakdown confirmation. There was nothing here telling us that Apple was going to break down other than the fact that it was rejecting the previous day's close and potentially showing relative weakness. Now, on the 1-minute time frame, I did draw an uptrend trend line right here, and I took the entry short on this candle as the stock was rejecting the previous day's close, putting in a lower high off of the high of day, and breaking down, at least what I thought, breaking down from the uptrend trend line. So I thought for sure from here it was going to sell. Just didn't happen, right? So this trade winds up being a loss because we're short on this position. And instead of breaking down to the low of day and us profiting here, the stock actually rallies back up and reclaims 175. And I don't cut the position until this candle over here, as we get the break of not only 175, but also the break of the high of day. So the trade winds up being a loss. But I want to point this out. This trade, when I took the loss on this at least, where I cut the position at was just a little over a 10% loss. whereas the NVIDIA trade that I took was about a 20% gain, right? Well, it was a 20% gain. So if I did not cut the Apple trade where I did, look at, I mean, it still runs up into the high of day beyond that. This could have easily been 25% loss. Now, don't mind this dip here. That might have actually been a profitable trade for us at that point. But if this did hold up, right, there's nothing saying that this would have dropped down here. If this did hold above the PDC and we held through and it continued to run and run and run and we're holding and holding and holding and hoping, this turns out to be a really bad trade for us. So the point I'm trying to make is that by cutting the loss early on Apple, we were able to still maintain a green day because the cut on Apple was so fast, we were able to take the trade on NVIDIA and make that money back, plus some. So the point is, this is trading, right? Normalize these paper cut losses. They will happen. There's nothing that you can do about losses when they happen unless you're cutting the position early. That is about the only thing that you can manage. And how much risk that you assume, of course. But the main thing is, gotta cut the losses quickly. The moment that a trade is not working for you, close it. There's no point in sitting around on Apple short while it's pressing above the high of day, reclaiming the PDC, breaking over 175. We didn't want to see all that. Close it the moment that it doesn't work, the moment that you don't get the confirmation, because if you can cut it quick, chances are you'll be able to make that money back in 1 to 2 trades down the road. And that's exactly what we did after we took the trade on Apple, jumped into NVIDIA long, something that had a bit more momentum, top side, right? And showing some strength, and we're able to capitalize on this. Okay, that's it. Just wanted to review those 2 trades for you. I hope that the video has helped you out. If it has, again, press that like button for me. It's the best way to support the work that I do. And thank you so much for your time. Take care, and I will see you all in chat.